If you've been thinking about getting a mortgage in Canada, then you're going to want to stick around and watch this video because we're going to be going over the top 10 things you do not want to do if you're going to be applying for a mortgage in Canada. These things will not only affect the terms and conditions of your mortgage, they could also affect your mortgage affordability or even just prevent you from being able to get the mortgage in the first place. So, if you're going to be thinking about getting a mortgage, you're going to want to watch this video, and if you find this information helpful, I would love a like and a subscribe to the channel. We love putting out content to educate you on this. So without further ado, let's jump into it. All right, and first up, and I feel like this one's kind of obvious, but you never know, and that is going to be do not quit your job, change positions, or suddenly decide to become self-employed if you're either going through the mortgage process or thinking about starting it. Lenders do value earning consistency and job history, and they're going to look back and see this, and they generally want to see at least 2 years of income from the same employer. That's going to give them a lot of confidence. If you change up your role or become self-employed, that could not only lower the amount that they're willing to lend you, but it could even just disrupt or delay the entire process until they see you consistently earning again. And if you do this, lenders could also see you as a higher risk, and like I said, the other points could lower the amount they're willing to give you, or might even stop them from wanting to give you anything at all. So for those reasons and more, don't change your job, stay employed while you're in the process. If you want to do any of this, you can do it after, so long as you believe that you can continue to make the payments. Okay, and tip number 2 is you do not want to go buy a car, truck, or boat. Okay, I mean, if you're gonna buy it cash, sure, maybe, but you definitely do not want to finance it while you're going through the mortgage process and before you've actually completed on the property. If you're going to do something like this, it will actually increase your debt to income ratio, and that is a ratio that lenders are going to look at when determining, hey, can this person take on another monthly debt payment? And while, you know, $300 to $500 a month for your car payment may not sound like a ton, it can actually affect your approval amount by a pretty significant margin. You know, $500 could affect the amount that your lender is willing to approve you by $100,000, $150,000, which, if you're a first-time buyer or maybe, you know, you're looking to upsize and get your second home, it is pretty significant. It can be a really big difference between, you know, an extra bedroom, an extra 2 bedrooms, an extra bathroom, all that stuff. So if you want to buy a new vehicle or boat or whatever it is, please wait until your home is closed. And if you're able to, once again, you'll see this is a common theme. If you can afford the payment and, you know, keeps you, you know, living comfortably, then by all means do it, but wait till after your home is completed. And at number 3, you do not want to charge your credit cards or lines of credit excessively. Leading up to the application process, you do want to keep any credit that you have existing, you do want to keep it in check. There is a thing called credit utilization. Now, you know, in a perfect world, you want to keep that amount under 30% because it will signal to lenders that you are not stretching yourself thin. If you are utilizing a lot of credit and maintaining a high balance consistently, that could, you know, give other lenders red flags, and they may be a little more wary about giving you credit in the future. So if you can, just in the months leading up to it, keep your credit usage down below 30%. Try and pay off as much debt as you can before going into the process, so that way in the eyes of lenders, you know, you're looking less like a risk and more like an asset to them, and they'll want to give you some money. So that is tip number 3. And number 4, do not spend the money that you have set aside for your closing costs. I know that for some people, sometimes as they get closer, you know, maybe they want to buy an extra bit of this or that, they want to spend some of that money. In a previous video, I went over that generally with my clients, I recommend they have about 3 to 5% as the purchase price for not only closing costs and to cover all that, but also a bit of money for a rainy day. When you're going through the mortgage approval process, your lender is going to expect you to be covering all of these costs. They are not going to take them. Maybe they pay for the appraisal, but that's up in the air. And you're going to need money for not only your legal fees, for taxes, and not just property taxes, but PTT, and that is a big one, my friends. And you're also going to want some money for a home inspection, and like I said, probably the appraisal as well. And you're also just going to want to have some extra money aside for after you've completed in case anything comes up. Like I mentioned, some rainy day money, or maybe you want to do some renos. You just don't want to make sure you completely drain your bank accounts while you're doing this. So yeah, tip number 4, keep that money saved up. And number 5, and this one is a bit of a doozy, but you do not want to omit any debts that you have or liabilities that you may have as well when you're going through the application process. I know sometimes for people they might have, you know, smaller debts or whatever it is, or liabilities that they feel that maybe they shouldn't mention in their application process. But please, please, please make sure you are very transparent and include all of it, because they will find it. No, but like they'll do all kinds of credit checks, credit reports, and they're very thorough when they're going through the process and like kind of investigating somebody to see if they want to give you that money. And if you're found that you've been dishonest or you're hiding information, it could not only just jeopardize your ability to get the mortgage, but, you know, more realistically just affect the amount that they're going to be willing to give you. And really, full disclosure is kind of the point, because what the lender wants to ensure is that they're going to approve you for an amount of money that actually fits your circumstances, right? They don't want to put you in that position where you're absolutely drowning to make the payments, because really, well, they're not really that concerned about you. They're just concerned about your ability to pay, and they want to know that their investment in you is not going to be at risk. So yeah, please be honest, don't omit details. And at number 6, you do not want to buy or finance new furniture. I know that when a lot of people are, know that they're getting into your house and they're planning how they're going to use all that wonderful new space they have, it's really exciting to think about all the lovely furniture you could buy, like that awesome L sectional or that ottoman, whatever it is. Even if it is 0% financing, it will show up as a new financial debt obligation, and that will affect your debt to income ratio, which could impact your mortgage. Even if you finalized it, but it's before closing, so you really, really want to wait until your property is closed. I know this is a bit of a common theme here, but it's just true. So if you want to get some new furniture for that lovely new space that you are buying, you gotta wait until they've given you the money for your mortgage and it's closed. And then, like I said, if you can afford it, go buy the furniture you want and, make the space as beautiful as you want to make it. And numéro 7, which is number 7, we have do not get multiple credit checks. Leading up to your mortgage application process, if there are multiple hard credit checks, like the kind that there would be for car loans, credit cards, whatever it is, if those start showing up, each one might only, ding you a couple of points, but if there are several over a short period of time, lenders can see that as a red flag because it shows that you are actively seeking other debt or other credit. Just, stick to the pre-approval checks while you're going through the process. And as I've said for the other points here, wait until after the process is done if you're going to seek out other debt or credit. Okay, and at number 8, we have do not make large deposits without consulting with your lender beforehand. So, you go find that briefcase of money down by the creek or whatever it is. Do not deposit all that money in one big lump sum, or probably in general. But all joking aside, if you do need to make any sort of large deposit into your bank account, you're going to want to consult with your loan officer, your mortgage broker, your bank, whoever it is, and be prepared to document where that money came from. If it's a gift or some other legitimate source, this is going to be important, because the bank's concern, if you were to just get a random deposit of money, is that at some point you have to pay it back, and they want to know that if you're getting this money, it doesn't have to be repaid, because if it does, that is also going to affect your debt to income ratio, which at the end of the day is going to affect your mortgage approval. So yeah, if you got to make those deposits, make sure you've prepared a document showing where that money came from, and as a bonus, try to ensure that it's in your account for at least 3 months before you're actually going for your mortgage approval process. Number 9, we have you do not want to be changing your bank accounts or banking institutions. When you're going through the process, the lender generally will require you to send in statements, and they just want to see, what your spending habits look like, when is money being deposited into the account, as well as your ability to save. And they generally want to see as much financial continuity as they can. Switching accounts or financial institutions can really disrupt this and slow down the process, as the lender looks to kind of try and paint a full picture for themselves so they can feel confident in lending you the money. So, like I said, keep your accounts as stable as you can, and if this is something you do want to do, please make sure, like with the other points, it's done after your house is closed. And last but not least, we have do not co-sign a loan with anybody else. It could be your mom, your dad, your brother, your sister. I mean, okay, well, at the end of the day, it's up to you if you want to do that. But if you do co-sign on a loan with somebody, the bank is going to look at it as if the primary person on the loan defaults, you will now become the primary and be responsible for paying that loan back. And surprise, surprise, most lenders will see this as liability or risk. So if you are thinking about going through the mortgage application process, please make sure you do not co-sign any loans leading up to the process. Like with all the other points, if you want to afterwards, you can, but you need to make sure that if you are co-signing, that you can make those payments on the cosign as well as what your other financial obligations are. So yeah, that is point number 10. Okay, and before we wrap everything up here, I have to give a huge shout out to Claudine, who actually gave me the idea for this video. And there we have it, the top 10 things please do not do if you're considering getting a mortgage application. And if you found this video helpful, as always, I would really appreciate a like, a comment, and a subscribe to the channel. I really want to grow this channel and just get some really good information to people just like you. So if you have some questions about the real estate market here, or you just want to have a conversation about real estate and you want to know something a little more specific that I haven't covered, please get at me down below or my contact info. And as always, we'll see you in the next video.